All right, welcome back, traders. So in today's video, I have an exciting trading recap to share with you today. I'm CJ with Trade Together, and I'll be diving into some of the trades I took on NQ futures this morning. So join me as I walk through the analysis, some of the insights on some of the profitable trades. All right, let's get started. All right, so before we jump into some of the details, I'm going to add some context, what motivated me to take some of the trades, and kind of getting right into it. As we saw a lot of volatility right off the start, as we usually do. I knew that we would have a lot of key setups, particularly the way I trade with the strategy. I posted about it before, using order blocks, fair value gaps, keeping very simple, smart money concepts with scalping the NQ. All right, so let's look at some specific trades. So the first trade I took, I don't trade the open, so I let the market kind of develop and start painting the picture for me. That first trade I took was based on a combination of factors. So as we see here, we got a big imbalance prior to the market open, creating some fair value gaps. We halted down here. This area was a key level of demand from previous price action, but once we created this higher low, I figured we would rally up into this area. Now, because it's a large fair value gap, I'm watching the consequential encroachment here, which is the midline inside this fair value gap. Figured as soon as we started seeing that, as long as we didn't bust through to the top side and saw the rejection, it was good enough for me to take back down to resistance. Again, short trade, short scalp. This one was 81 ticks. Pretty successful here, but this here was just a liquidity sweep from that fair value gap, risking a 1 to 2.5 here, 32 ticks at the loss. All right, so for the next trade, utilizing more trend here, just looking for some confirmation with higher highs, higher lows as liquidity starts to build up on this low side. As market structure swept lower, I initially indicated this as just a transition more into a bearish side, but it didn't break through and pulled back immediately. So it doesn't look like a great short setup. And one thing you guys should add to your strategy is finding your discount premium zones. So as long as your rule is, hey, I will not enter short trades unless it's above 50, and I won't enter long positions unless it's under 50 here in this case, then you'll run the risk of losing a couple trades, but on the back end you're gonna see consistent profits because you're not gonna get into sell orders down here taking shorter profit where you have to risk a little bit more to get in the trade. So the next trade setup was actually established with the fair value gap that we had set up just right here at 10:06. I knew that when we expanded, so we swept the low, expanded relatively quickly out of this zone, sweep the high side liquidity, and I was just looking for a pullback because I know we're going to come back up into this this fair value gap up here, potentially sweep in the high side here. So initially, I knew I wanted to take a shorter trade again, just to pad up my profits on the day so far. So as we pull back in, I had a market order to buy here, took the trade, set my stop loss just below the fair value gap, and then got lucky here as we continued right back up, taking profit right at that fair value gap low. Next trade was not a successful trade. Got stopped out at 31 ticks. These happen. I think 6 for 8 on the day. This was a good setup, just didn't play my way. I feel like if we wick through the top here, we'd come back. We did during the inside this bar, but then continue to push higher. Later on, find that the trade did end up going back the way, but like reflecting on the trade, it's important to note proper risk management played a significant role in exiting this trade without losing any of the profits that I had built up before. So having a well-defined stop loss, I was able to protect my capital because trades don't go as planned sometimes. So this highlights the importance of sticking to the trade plan and managing your risk effectively. All right, for this next trade, it was a little bit more successful. You could see how I jumped in a little bit too early prior to it, getting stopped out at 31 ticks. This next trade, we end up creating a lower high, and if you note my last video, this was significant in the transition from a strong bullish move higher, as we failed to put a new high in before breaking lower. So I decided to take a little bit more risk on this trade at a 40 tick stop loss. Figured if we swept high here, came back into this level and kept getting rejected, I was going to take a breakout trade here at 593 and then take it back down to a key area where we had recently developed some demand for buyers. So we have basically two areas that lines up where from the initial part of the day where I want to sell. So my high and low is above my 50. So it's a good position to sell. My risk is limited to 40 ticks with potential profit of 185. So that trade went in my favor pretty immediately and came right back down to my take profit level. However, the next trade, I was looking for a liquidity sweep and a pullback. We rejected this high side here and I got it here at 1152. Again, this trade 28 tick stop loss. This was kind of a silly trade. It was really following the plan as we're getting close to that noon time when I like to stop trading. However, continue to watch the markets develop. Also noticed here on our Trinzy and our Trinzy trade indicators that we were going to have a decent setup for a short position. So I wanted to highlight how powerful this tool can actually be as we got a sell side illuminated. We're up here in our red band. Money flows switching. We get the MACD crossover and the EMAs are starting to go red. So I kind of snuffed out this trade prior to. I wanted to take this trade if we created the fair value gap and started moving lower. So I ended up taking the trade. Like I want to say I entered in as we came back into the fair value gap and I wanted to take this thing down. So we had a sell side illumination signal built up on our indicators and I wanted to target just a little bit lower and see if we can sweep through the previous liquidity that we took the long trade on earlier. So I wanted to see that. That ended up being successful for this trade. Risking 43 to 248, pretty easy setup and a nice scalp as we consolidated here and what we would call as a distribution zone and before we dropped out. So for my last trade, my last two trades, very similar from the previous trading setups, is we saw a massive expansion off the bottom. Figured we'd come back down into this area. The reason I marked off this as a key level of demand here is because the market structure shift that happened here initiated off this red candle. So as we've all learned, your order blocks are that first down candle for your demand level, first red candle before a massive move higher and a continuation. Saw that we had a big sellers level here and wanted to take a market entry if we were to come back down. We end up doing closer to targeting that sellers hold level. So this trade took a little bit longer to develop, but end up rewarding me with 146 ticks. So my last trade today, kind of using both the entry and the confirmation off the previous trade and the pullback, I wanted to take this trade as we saw a pretty significant run up. Figured, okay, if we pull back into that key zone, so under 50, back into this fair value gap, I'm willing to put a market order in here, risking 24 ticks, basically snipe this entry to take it right back up into our seller's hold level. So now that we've reviewed the trades specifically and the outcomes, I'm going to discuss a couple of lessons I've learned from trading today, and I wanted to pass along to you. So using trends and breakouts and whatever strategy that you've tested can lead to profitable trades. So conducting thorough technical analysis, staying updated on market news. So we know there wasn't much going on today. We could spot real potential for some opportunities and significant price move, which we end up capturing today. Lesson 2 is risk management. It's crucial. If you don't have a stop loss on NQ, your potential for loss is going to wipe out any of your gains that you made. So step 1, protect that capital. It's absolutely important to define your risk tolerance and adhere to your trading plan so that it pulls the emotion and the decision making out of it. Emotional decision making out of it. Third lesson is by regularly reviewing and analyzing your trades, it's going to lead to rapid growth as a trader. So by assessing both successful and unsuccessful trades and your trading recap, you're going to identify patterns, refine strategies, and continue to improve upon your skills. So this wraps up NQ futures trading for today. Analyze a few profitable trades as well as a couple miscues, but some of the key lessons learned here from this experience will definitely continue to move along as I start to develop not just my trading strategy, but help implement that within your own trading strategy. So remember, trading requires a lot of discipline, thorough analysis, and effective risk management. So as you continue your trading journey, just strive to refine your strategies and learn each day from each of your trades. Hey, so if you found this trading recap helpful, please give it a thumbs up, subscribe to our channel for more content, share your thoughts, experiences in the comments below. Again, we're on the Discord link will be provided to you in the comment section. Be happy to have you join us. Till next time.